Crypto lender Vauld gets another extension in regards to its restructuring plan. Bitcoin bull run. Institutional investors look like they are still on the sidelines, whilst Bitcoin miners and average hodlers are back in the black. China's digital yuan used in securities trade for the first time. Security Exchange Commission of Thailand issues crypto custody provider rules, whilst Japanese regulators want crypto treated like traditional banks. Binance burns over $500 million worth of BNB tokens, and South Korea launches online metaverse plans, a replica of the city of Seoul. Hello, everybody, and welcome to the Assets of Value podcast. Today, on 17th of January, and every day, we connect to share our insights and perspectives on crypto, Web3, and NFT topics. We are the founders of Assets of Value, a Web3 research organization. Our podcast is not to be taken as legal or financial advice. Let's dive straight into it. Abe, is Bitcoin still showing strength?
Apparently, Bitcoin is showing a lot of strength, a lot of determination to stay above that 20.8K price range. One might ask or one might wonder why this 20.8K price range is important, because miners are experiencing or asserting profits at this point. So whenever Bitcoin dips back to 20.8 and eventually to 19.8, miners are not making profit. When miners are not making profit, they might stop doing the business and it will affect the overall health of the ecosystem. We have a lot of whale miners that who are not willing to let this happen. They'll keep on pushing BTC to new highs, at least to 22K or 21K, or retain the 20K stronghold for the foreseeable future in January.
Should I be surprised that the market is still showing and trending green? I'm not entirely sure. It is a welcome relief, and the relief itself does not seem to be slowing down. Bullish for crypto and always positive vibes when there's green candles everywhere. Let's dive into the news and let's start with crypto lender Vauld. Vauld has now until February the 28th to present a plan for its restructuring after being granted an extension by a court in Singapore. So it's received a couple of bids from two digital asset fund managers to take over the struggling lender. Earlier on, Vauld, the crypto lender, suspended withdrawals, trading, and deposits on its platform last July. Now, I see this as positive because the authorities are giving crypto firms a chance to fix their business. And this is positive for me because it feels like the authorities are trying to help out either the firm and its users. Abe, what do you make of this?
Definitely, authorities are trying to keep the space alive and keep the space healthy for retailers. When it comes to retailers, I think 2022 was a bad year. We suffered Luna, we suffered 3AZ, we suffered FTX, and authorities want the people to be trading safely when it comes to crypto. On top of that, we are seeing most crypto VCs are failing to register good investments or good returns in Q4 of 2022. What that means is they are lagging behind and they are yet to make profit in 2023 Q1. Without making seed investments, without making pre sale investments, these VCs might not even be able to sustain their businesses. So, authorities are trying to make sure that crypto is not just healthy for retailers, but also for these VC firms, these large scale funds with 1 billion, 2 billion capacity. When these funds are alive and active in the space, then the space grows. Also, when authorities already have a foothold in the industry in terms of regulation, they can just fiddle with the crypto world however they see fit. I think this is the whole point. More regulation, more control, more ascertainty, and then letting the public to invest in them. This happened with the share market, this happened with the stock market, this is happening with the security market, and they are trying to let it happen with crypto also.
Regulators seem to be dominating the news today, with China, Thailand, and Japanese authorities laying out their stance in how they will treat crypto. But before we move into that, let's talk a little bit about Bitcoin and its continued bull run. It seems as if institutional investors are still on the sidelines, are not buying into this pump. Looking at data from CryptoQuant, although we've seen a increase in the last few days, it looks like that the fund volume index, the fund holding index, and over the counter transactions are not really reacting, which suggests that the big whales are not yet ready to dip their toes and back this bull run. So, after 2 months of the price hovering around the 16 and 17,000 region, the three main indicators where we're looking at price to rise to 21k, the level of transaction volume is insignificant and there's really nothing unusual to note. And when we look at the fund holding index, institutions where Bitcoin holdings are decreasing, only prices have risen. And the over the counter transaction, we're not really seeing any unusual transactions occurring here. It was actively traded on the exchange only, with no unusual transactions on chain. Usually at the bottom, we'd see institutional investors buying quietly through over the counter trading. We're not currently seeing this, and it just feels like it's trading volume that's driving up the price. So given these indicators, it's unlikely that the current rise means a real uptrend transition. And while price is moving upwards, Bitcoin miners are in the black, which is positive news. And I think that this is a welcome relief for investors and miners alike. What's your thoughts on this?
As we discussed before, miners are whales because actual whales have left the space or are dormant. There are no institutional whales anymore. Thus, whenever a miner try to do something, whenever they are in the black or whenever they are in the red region, that's the negative profit region, they tend to do something crazy like pumping Bitcoin. That's a multi-billion dollar asset out of nowhere, like 10 to 12%, and making registering massive gains. I really hope that miners do provide a safety net for Bitcoin because the Mt. Gox FUD is yet to take place. It is said to be released 137k Bitcoins in the month of March, which is another month away. When it happens, there's a possibility, there's a large possibility that Bitcoin might revisit its previous lows or may even dip lower. But if we have, or if we ensure that miners retain their buy walls or they just stay away from selling, I think Bitcoin has a chance to register a positive Q1 and Q2 in 2023. Any upturn, any significant momentum will come from miners. They were the first to leave the space in terms of the bull market to bear market, and they'll be the first to enter the space in terms of bear market to bull market.
We are continuing to monitor to see how long this Bitcoin rally will last. Let's move over to China now. The country itself has moved away and calmed its zero COVID policy and is almost embracing crypto. So Xiao Chu Securities, potentially I've said that wrong, which is a Chinese security firm, has enabled the electronic ECNY payments on its mobile application on Monday. And this is marking the first use case of central bank digital currency in securities market trade. This is a bullish moment because it's as if China is now embracing crypto, but they are completely doing it on their terms. The electronic Chinese yuan payment function was launched in cooperation with the Bank of China, and it allows investors to essentially purchase wealth management products with the digital yuan. So I think we're going to see more of this as it rolls out continually throughout the financial landscape within China. But it does show a shift from old technology embracing crypto. And what we're seeing in Thailand, the Security Exchange Commission of Thailand is issuing crypto custody rules to see how the crypto custodians need to have a contingency plan in case of unforeseen events. It seems like the whole market from a global perspective seems to be maturing. And this is a trend that we touched on earlier where adoption will increase, but before adoption can increase, we need to see maturity in the space, and regulators stroke governments are trying to shore up and provide that confidence.
Of course, I agree. Although there's a catch, what happens when the market matures? What happens when the Bitcoin and Ethereum matures? Their volatility will become less and less, and it'll resemble the volatility of stock market. When it happens, crypto or in general Bitcoin or Ethereum will not be such an attractive investment option. Investors will have other bargains, other high potential bets they could take. In my opinion, volatility is a feature of crypto. People make profit from volatility. Traders earn profit from volatility. And when the market matures, the volatility will go away or go down or become minimal. And that might affect crypto and its future as an investment vehicle.
You're 100% correct. I mean, we're seeing that exactly rolling out in Japan, where regulators want crypto treated like traditional banks, where you've got industry individuals that are coming out and saying that crypto needs the same safeguards as financial institutions and banks. So the regulators in Japan have urged global regulators to treat crypto the same way as they do for banking. And this essentially is calling for tougher rules for the sector. What this means is that crypto needs to be controlled. And if we implement effective regulation, as we have in the banking world, we can then regulate and supervise like we do in traditional institutions. Obviously, this stance comes in the wake of the collapse of FTX and the said firms, which each of them have rattled the industry and sparked an urgency for regulators to take action. However, we've not seen a uniformed approach how regulators will be tackling the crypto problem as well as the central digital bank currency. But for sure, it's maturing. It is requiring and moving towards tighter regulation, which will then bring in the influx of financial institutions. And with that comes new business, new adopters, and a new growth period for cryptocurrency as a whole. Let's move on now to Binance. It always seems to be in the news. This time, the BNB chain burns over $500 million worth of BNB tokens. And since the introduction of the BEP 95 contract, over 145,000 BNB has been burnt under this mechanism. Why do tokens get burnt, and why is Binance doing this at this point in time?
Great question, Schwab. CC has just one aim: control the BNB supply and limit it to 100 million. So he envisions a world or crypto world or a crypto investment ecosystem where the total or the maximum supply of BNB is just 100 million. And he will do it eventually. The quarterly auto burn ensures that BNB supply is decreasing, just like EIP 1559 does for Ethereum. Also, it ensures that additional selling pressure is pulled off from the market so that investors, BNB token holders, will benefit from the positive price action. This is how a community grows into something bigger. Already, BNB is the third largest cryptocurrency and it has the potential to grow even more. If you compare BNB BTC chart, you can see that BNB is almost at the all-time highs levels, maybe a drop from 10% from all-time high levels when compared to Bitcoin. This is amazing how a centralized coin, centralized ecosystem holds its value even in the bear market.
Showing definitely strength and bullish behavior in the BNB token overall. Certainly agree, and CZ is definitely playing the game perfectly. Just as we close out, it's worth quickly mentioning South Korea launching an online metaverse replica city of Seoul, and this is to improve public services. We know that South Korea is one of the most forward-thinking country when it comes to technology, and it's no surprise. We saw a similar movement with the Dubai police entering the metaverse to almost act as guardians and to provide a safety net for its citizens should they wish to interact with any of the services that Dubai offers. It's great to see another bullish moment for Web3 metaverse adoption. I think that about sums it up for today. It's been super fun. I'm glad you were able to jam with us. That's it. Until next time. Thanks, everybody. Signing off.